What's up, everyone? It's Hey John, and today I want to give you guys a cryptocurrency market update. And so far, there is some good news and there is some bad news. Well, let's start off with Bill Gates. He is saying that NFTs are a sham, and how in the heck is that going to make the world a better place by buying expensive monkey or ape images? While he does have a point when he says that, at the same time, NFTs are bigger than just a few pictures. The technology is strong, the technology is very revolutionary, and there is more application than just buying and selling, I guess, JPEGs. Michael Saylor and Bitcoin. We know these two names, they are almost synonymous with one another. When you hear the name Michael Saylor, you think of MicroStrategy, you think of $2.5 billion company, you think of a guy on Twitter with lightning eyes, you think of a guy with a McDonald's hat, because humble beginnings, right? When you hear Bitcoin, you think storage of value, you think of El Salvador, you think of the Lightning Network, you think of all sorts of gravy things. So now I want to cover some of the cons of what cryptocurrency is facing. We are facing a macroeconomic event where, as you know, cryptocurrency has no say in it whatsoever. We are seeing QT, quantitative tightening, and this basically means we are increasing the interest rates. When you increase the interest rates, that means that you are literally destroying money. And when you are destroying money and reducing the velocity of money, what do you think happens to assets when you have to pay more per month for it? The rule for 10x for housing. So imagine you have a house that you buy at 5% interest rate and it's worth $100,000. Now, if the interest rate increases to 6%, which it just did, that means this house is now subtracting 10%. So now this house is worth 100,000 minus 10,000 because that's 10%. Now the house is worth $90,000. And the reason for this is because since there's less money circulating, that means that asset prices will have to decrease because the value of the dollar is now increasing. So this means your dollar is supposed to be able to buy more because there are fewer dollars, thereby making it more scarce. So this is the backdrop of what's going on a macroeconomic level for the United States of America and the whole world, I would say, to a certain degree. So now that we know that J. Powell and the Fed are trying to increase rates over and over and over, word on the streets is that the markets are priced in at 75 to 100 basis points, and that is the interest rates increasing. But this doesn't mean that in July and August, September, etc., there will not be more interest rate hikes, because this is just to try to, quote unquote, slow down the inflation. So now that we have a backdrop of what the macroeconomics is, let's discuss Michael Saylor and his Bitcoin war chest. Now, you do realize that he has over 120,000 Bitcoins at an average price of around $30,000 as his buy-in price. So currently he's underwater by quite a bit. So Michael Saylor has effectively borrowed money to go long on Bitcoin, or in this case, buy Bitcoin and store it off somewhere. But now that we're going down, the current price as of this recording is around $21,000. This means that Michael Saylor and MicroStrategy is in risk of a liquidation or a margin call. So what does this mean? This basically means that the person who lends you the money, they're saying, oh my God, I'm already losing tons of money, so let me get back whatever I can before this asset, being Bitcoin, goes down some more. But of course, Michael Saylor has reassured us saying, hey, you know what? I spoke to them and they are down to HODL. I don't know, Michael. We're going to need some proof of that because, as you know, these investors, they're here to do one thing and one thing only, make that money. When you have an unhappy investor who isn't making money, chances are they are going to want to pull out, or they're going to want a great explanation. And you just saying HODL, yeah, that doesn't inspire a ton of confidence. And then Michael Saylor is also saying that, hey, you know what? I am going to have more collateral to further collateralize my Bitcoin assets. But the thing is that if you're already a $2.5 billion company and now you're down from your $4 billion asset purchase of Bitcoin, I mean, what else do you have to really offer to collateralize your kidneys? I don't know if anyone wants this. So there is some good news at the end of the tunnel. You're seeing the Fed and everything saying, hey, you know what? We're going to tighten our belts and we're going to continue to raise rates. But you have to remember, folks, they have a huge debt to service. Imagine $30 trillion. Wow, that's a lot, right? And imagine the interest rate increasing on a $30 trillion debt. So imagine this, folks. You have the current funds coming in at this range. Your current debt is around this range. And when you increase the interest rate, your debt now increases to over here, but you still have the same amount of funds coming in every single month. And this is your tax-based revenue. Now imagine, how are you going to service this debt when it increases due to interest rates, due to quantitative tightening? That means that you're going to need to increase your tax-based revenue. Okay, fantastic. So how do you increase your tax-based revenue? Well, easy, right? Number one, you increase taxes. Number two, you reduce expenditures, aka kill off some services. Take out some services? I don't know if this is possible. Imagine getting Social Security taken away. Imagine all of the voters who'll be pissed and they will be calling for a recall. They will be coming after you and they will be voting against you at the midterm. So while we see all of this talks about increasing the rates, ladies and gentlemen, basic math, it is not sustainable. So this means that, in my opinion, unless there's some wizardry that Jay Powell and the Fed can do, most likely by the midterm, by the end of this year, December of 2022, the administration can come in and say, hey, you know what, guys, we are going to do you a solid and we are going to cut interest rates. And this is supposedly going to create a euphoria to make all the cryptos and stocks all go to all-time highs, because we all know that we love our cheap interest rates. Is this a strong possibility, or are we going to see the Fed continue to raise rates irregardless of what anyone says or anyone wants? Is this going to be another Paul Volcker moment where we see in the early 80s nonstop interest rate hikes over and over and over, and eventually the United States of America, their debts become actually positive because of all the interest rates? But when that happened, we saw all the assets, they tanked. As they say, this time is different. Can Bitcoin maintain its current $21,000 valuation? Do you think Michael Saylor will not get margin called? This is all contingent on a non-Black Swan event. And the largest stablecoin, Tether USDT, it can fail. Just like when we saw in 2008, we're seeing miniature banks fail first. In this case here, in the crypto world, it was Terra Luna, and then it's Celsius, and Tether USDT is the equivalent of, say, Lehman Brothers. If Tether USDT potentially fails and depegs and goes to, well, zero and gets liquidated because they have a huge supply of Bitcoin, that means, folks, that will be your capitulation, that will be your Black Swan event, and that means that if you have any capital to deploy, ladies and gentlemen, that's going to be a time where you buy low and sell high. These are all the scenarios that we have to be aware of so we can know what's going on and so we can react and plan accordingly. Make sure you guys like, share, and subscribe, and I will catch you all on next one. Shh.